let's talk about current market conditions. Looking at the SPX, we've seen currently trading at 2830. 2800 has been a strong support. Let's draw that line. So at 2800, this is the support that we have seen. If I can just draw a line, that would be great. Okay. So if I zoom out of this, so 2800, we've touched this in November 7th. Same thing happened 2018, 2019. Currently, we've touched this in May 10th, and retested yesterday. So 2800 is the main support. You can see the Bollinger Band right around the 2800 level on the Bollinger Band on SPX. And currently, we're trading at 2830. So as long as we hold on to the 2800 level, you know what? Let me change this to trading view because this is. This way you guys can see this better. So we're talking about 2800 level. We've reached that in June, November, December. So retested this several times on in May 13th. We retested it yesterday, and currently we are still trading above 2800 level. So potentially market can overshoot and trade below. Next level of support is a lower Bollinger Band and the 200-day moving average, which is another level of strong support. But you can see there's a little room to the downside. There's more room to the upside. If we break out of the 2900 level, we will probably retest 300 level or 3000 level in SPX. So I think at this point, there's a limited room to the downside, and there is more room to the upside short term, right? We're talking about 30 to 60 days. But potentially, if there is any negative news, then the market might, if market does break to 76 level, this is where we would turn bearish, and potentially market can retest to 64 or even 240 level by the end of the year. So a lot of it depends on the news and what's going to happen between the tariffs war between the United States and China. If you look at some of the indexes that can monitoring is semiconductors. We've seen semiconductors usually in the late stage of bull market, which we're currently on, can potentially lead the market to the downside. We've seen semiconductors, 20%, close to 20% correction, which could be classified as a bear territory. So semiconductors are leading the market to the downside. We've seen emerging market also sold off. Together with China and Europe. And what are some other key indicators? Treasuries are breaking out of the range. Prices are lower yield, higher prices. We still haven't reached the 52-week high, the 130 level. So, but still, Treasury yields are continuing to go down. Let's see what any other interesting sectors. Biotech, we talked about biotech quite a lot. In December, corrected to 64 level. Retraced back almost to the 52-week high, not quite to the 52-week high. Now trading below the 50-day. Let's see. Let's look at the one-day moving average. Trading below 50-day moving average. So pretty bearish formation on biotech. Small cap. Also retested the March lows, kind of trading from that low. So you have a lot of support on IWM. Again, there's a lot of support at 147, 145 level. So it's important for small cap to hold on to this level. Wicks, not a lot of fear or anxiousness in the market. We've seen support at around 14 level. We were as high as 24 when the tariffs negotiations started, or escalation of tariff ratchet has started. We were as high as 24. So right now there's not a lot of anxiety, not a lot of fear in the market. So that's why I don't think we're going to have a sell-off in the next, months or so. And in terms of marijuana stocks, alternative investment, kind of trading in the middle of the range. We were as low as 23, we were as high as 45. So we had 50% retracement in December, similar to small cap. Small cap biotech stocks, we retraced it not quite to 52-week high, but always at 40, we're able to continue retesting the 52-week high. And now we're trading below 50-day moving average. It's also a bearish formation for the alternative harvest and small biotech stocks. Typical leaders of the late stage of the bull market are utility stocks at 52-week high, making new all-time highs, which is good for general market. That means we're not in a bear market. We're still kind of continue to be in, that's usually the sign of a late stage of the bull market. And the same thing for consumer staples. So consumer staples also at 52-week high. So I don't think there's a panic in the market based on utilities, based on the Wicks. We are retesting some of the lows on some of the indexes, but again, I think the key indicator is to look at the spiders. And as long as spiders are staying above 276 level, I think we're in the late stage of the bull market. If we break 276, 272 level, I would say that then we're going to have another leg, and we're slowly switching to the bear market.